So here we go, we have our final learning objective, that is to understand how to construct and use balanced scorecard. So here the objective is more of a learning perspective. So we are just going through the theoretical part of constructing a balanced scorecard. So let's see that. So the balanced scorecard consists of an integral set of performance measures that are derived from and support a company's strategy. So importantly, the measures include company's balanced scorecard are unique to its specific strategy. So it enables the top management to translate its strategy into four groups: financial, internal business process, customer and learning and growth prospects. Right? So through balanced scorecard, management translates its strategy into performance measures that employees understand and influence. So the premise of these four groups of measures: financial, customer, internal business process and learning, is that the learning is necessary to improve internal business process. So this in turn improves the level of customer satisfaction, thereby improving financial results, which emphasis on improvement, not just attaining some kind of specific objective. So here it is. So we start from vision and strategy. So we translated our goals, financial goals, customers perspective, and internal business perspective, and then we translated these goals into financial goals, customer oriented goals, internal business processes, and learning and growth. So what do we mean by financial goals or financial measures that has our financial performance improved? Customer focus, that is, do customers recognize that we are delivering more value? And what do we mean by value? It is what customer perceive the value. For example, customers say that this pen values $900, the Microsoft pen, right? But Microsoft offered me $700 price. So customer perceive that I'm getting $200 more value. It's more valuable for me. If Microsoft will be charging the price for $900, I will be paying that one as well, right? So this is the value. Let me just write it here. So internal business processes means how we improve key business processes so that we can deliver more value to the customers. Learning and growth, which is our maintaining our ability to change and improve. So these kind of measures which correlate to their vision and strategy. So like our other measures of performance like ROI and residual measure, they rely on financial measures. So the balanced scorecard, it relies on non-financial measures for two reasons. Number one is that financial measures are lag indicators that summarize the results of past actions, which means if you earned 15% return in your past, that does not guarantee that you will earn 15% in future as well, right? So that's why we call that these are lagged indicators or lagged lag indicators, lag figures. So non-financial measures are leading indicators of future financial performance, like learning and growth, internal business processes. These are leading indicators which will give you the benefit in future. The other reason is that the top managers are ordinarily responsible for financial performance measures, right? So not lower level managers. So we can say that the top managers, they basically sit in headquarters or head office, which is an investment center. An investment center responsible for revenue, cost, and investments, right? So in that case, you can say that the lower level managers, they are not responsible for any kind of increase in revenue, cost, or investment. That's why. The non-financial measures are more likely to be understood and controlled by lower level managers. So we can say that we can give them more control that how much their performances has improved our revenue, our cost, and our investments as well. So the beauty of the balance scorecard is that while the entire organization has have an overall balance scorecard, so each individual have his or her balance scorecard as well. A personal balance scorecard should contain measures that can be influenced by the individual being evaluated and that support the measures in overall balance scorecard. A company has its own balance scorecard and you have your own personal balance scorecard. In that score, you can see that how much you are contributing to the financial goal, how you are contributing to the uh, learning and growth, and how much you are contributing to the internal business processes goals and customer oriented goals as well. So let's move formally to introduce our balance scorecard. So a balance scorecard should have measures that are linked together on a cause and effect basis. So which means if we improve one performance measures, then another desired performance measure will be improved as well. So in essence, the balance scorecard lays out a theory of how a company can take concentrate actions to attain desired outcomes. If the theory proves false or a company alters its strategy, the measures within the scorecard are also subject to change as well. Right? So we don't have to develop another theory and it automatically changes if the company alters its strategy. So the balance scorecard and the compensation. So incentive compensation should be linked to the balance scorecard performance measures, and this can only be done after the organization has been successfully managed its balance scorecard for like 1 year or more. So managers must be confident that the measures are reliable, not easily manipulated, and understandable by those being evaluated with them. So it means in order to have compensation linked to the balance scorecard, we must compare our performance with some benchmark. So it means the benchmark would be your past performance. So in order to evaluate it on basis on balance scorecard, so you must have 1 or more years of balance scorecard score as well. So we have example here that assume a Jaguar pursues a strategy as shown on this slide. So examples of measure that Jaguar might select with their corresponding cause and effect linkages are shown figure. So here in the figure, the employee skill in installing options, what it can do, it will reduce the time to install the option, and also numbers of available options will also be decreased, which increase the customer satisfaction. When customer satisfaction is done, the number of cars going to be sold will increase. When number of cars going to be sold increase, it's going to increase our profit as well. When customer satisfaction is increased as well, it will also increase our contribution per car as well. So this is how linkages of cause and effect established. So it means employee investment in employee skills is it is belong to learning and growth, and the number of options available and installing time period, it will improve our internal business processes, and which basically satisfy our customer needs, and customer will be very much satisfied by this number of options available and time to install options, which improve our customers position, and when customers are satisfied, it improve our contribution per car as well, and our number of car will be sold higher, our profit will be higher. So it also improve our financial goal as well, right? This is how a balanced scorecard is created, and how these cause and effect linkages are between the goals are established. Okay, let's see that how the increased skills gonna increase our uh, other goals as well. So here, increase skills, so it will increase the options, which is the strategies, which will decrease the time period, increase the satisfaction, and then after increasing the satisfaction, cars sold will be increased, cars sold will be increased, and then the contribution margin will be increased. Ultimately, the profit is increased. So if the number of cars sold and the contribution margin per car increases, which ultimately increase our profit, right? This is how the balance scorecard works. So the idea of balance scorecard here is just that you understand more of theoretically. So and also how the linkages between the cause and effect of different levels are established, and that's it.